When we begin our trading journey in the stock market, we come across numerous candlestick chart patterns. There are over 100 such patterns, making it challenging to memorize them all, and it usually takes about 3 months to learn and remember. However, I believe it's not necessary to commit all these candlestick chart patterns to memory. Yes, you heard it right. In today's video, I'll be sharing an advanced method with you. This method will help you trade effectively without the need to remember each specific candlestick chart pattern. Many times we have observed market reversals even without specific candlestick chart patterns. However, many people are unaware that there is a hidden candlestick chart pattern indicating a potential bullish or bearish reversal in the market. The method we use to identify these patterns is called blending, where we combine 2 or more candles to interpret and make trading decisions based on the analysis. Before delving into this approach, there are some essential concepts I need to explain. Please make sure not to skip the video so you can fully grasp these concepts. Generally, candles come in 2 colors, green and red. As we all know, during the formation of a green candle, buyers move the price up. Consequently, its opening price is below, and the closing price is above. This is indicated by the upper wick, which represents the high price of the time period. The upper wick reveals how much the market went up during that time period. On the other hand, the lower wick indicates the low price of the time period during the formation of the candle. It tells us how far the price went down. During the formation of a red candle, sellers move the price down from its opening price. Consequently, the opening price is above, and the closing price is below. The upper wick represents the high price of the time period, while the lower wick indicates the low price of the time period. Collectively, we refer to this entire area as the range of the candle. According to the comparison of the total range, if the closing is near the high, we call it a bullish candle. Let's examine this green candle. Its closing is near its high, indicating that it is a bullish candle. On the other hand, if we analyze this red candle in comparison to the total range, its closing is near its low. This characteristic categorizes it as a bearish candle. Now, let's observe these 2 candles based on their colors. The green candle appears bullish, while the red candle seems bearish. However, when we consider the comparison of the total range, we find that the closing price of both these candles is near their low. Therefore, regardless of whether the candle is green or red, we will categorize it as bearish. Observe the candles. If you judge them based on color, the green one appears bullish, and the red one seems bearish. However, when you consider the range comparison, you'll notice that it is in the middle of its range. This means the length of the upper wick and lower wick is the same. We refer to this type of candle as an indecision candle or a doji. In other words, this candle is neither bearish nor bullish. In the case of such candles, we can make trading decisions based on the next candle. Now, understand carefully that there are only 5 types of candles in the market, and the rest of the 100 patterns are based on these 5 candles. The first candle is the bullish candle, in which the body is big and the shadow is small. Its color is green, and its closing price will be around its high. All these are its variants. We have arranged their variants in line according to their strength. It means that the most effective candle is the one we have placed first. The second one is the bearish candlestick. This candle is a big red candle with a small lower shadow and upper shadow. All these are variants of the red candle. The next one is the bullish long wick candle. This candle's body will be small, and the upper wick may or may not be present, but the lower wick will be double the size of its body. The color of these candles does not matter. It can be red or green. However, the lower shadow matters, and it should be double the size of its body. Let's understand why this candle is bullish. During the formation of the candle, the sellers take the price very down but are unable to sustain it. Then, buyers enter and bring the price back up. Finally, the price closes around the opening price. So at the end of this candle, we know that there is buying pressure, making it a bullish candle. The next one is the bearish long wick candle. This candle has a small body, and its lower wick is either missing or equal to none, but its upper wick is double or more than its body. The color of this candle doesn't matter. It can be red or green. Now understand why this is bearish. In the beginning, the buyers take the price much above the opening, but the price does not sustain above that level. Finally, sellers enter, pushing the price down again, and the market closes around its opening price. So, at the end of this candle, we know that there is selling pressure, making it a bearish candle. The next one is the indecision candle, and this candle's body is in the middle of its range. The size of the upper wick and lower wick will be around the same size, and these wicks can vary in size, whether big or small. The color of these candles also does not matter. They are neither bullish nor bearish. These are variants of this candle. After the formation of the indecision candle, we take trades based on the next candle. So far, we have understood that there are 5 types of candles. Now, let's talk about how to identify the hidden candlestick. It is very simple. We will use the blending method. For example, let's consider 2 candles. Now, we may not be able to understand whether it is bullish or bearish. To determine this, let's try blending. For this, we have to take the opening price of the first candle and the closing price of the second candle. Remember, we always have to take the opening price of the first candle and the closing price of the second candle to get the candle body. See here, the opening price is below and the closing price is above. It means it is a green candle. Next, the highest price point in both candles will form its upper wick till the body, and the lowest price point in both candles will form the lower wick point till the body. So now, the blending process has been completed and this candle has come to us. Now, let's determine which candle this is. Many of you might say that this is a hammer, but remember what I told you? There are only 5 candles in the market. We don't need to remember the names of the other candles. This is a bullish long wick candle. Its body is small, and the upper wick is small, or equal to none, while its lower wick length is at least double compared to the body. We mentioned that the color of the candlestick does not matter. Only the long lower wick part matters. Whether it is red or green, it is a bullish candlestick pattern. Now consider these 2 candles as 1-hour candles. When we blend these 1-hour candles, we can get a 2-hour candle. In this way, we can observe the sentiment across multiple time frames. Look at the next example. Again, we have 2 candles, and there is confusion about whether it's a bullish or bearish signal. Let's blend these candles and see what interpretation comes out. We took the opening price of the first candle and the closing price of the second candle. Since the closing price is below the opening price, its color will be red. Next, we measured the distance from the highest point in both candles to the body. Now we drew a lower wick from the lowest point of both candles to the body. So again, we have a bullish long wick candle. Only its color was green, and this one is red. But again, the color of the bullish long wick candle does not matter. All that matters is its long lower wick. The longer its lower wick is, the better the signal will be for us. Let's look at the next example. Here we have 2 candles. Based on the opening price of the first candle and the closing price of the second candle, we have calculated its body. Since the closing price is above the opening price, its color will be green. We also measured the upper wick from both candles, extending from the highest point to the body. Additionally, we measured the lower wick based on the lowest point of the 2 candles. Now here we have a bearish long wick candle. Its body is small, the lower shadow is either not there or is equal to it, and the upper shadow is double or more than the body. You might say this is a shooting star. Yes, but as the motive of this video is, we do not remember the names of all the patterns. Now you must be thinking that we've covered double candlestick patterns. But how do we blend triple candlestick patterns? It's also very simple. Here we have 3 candles, and so far we haven't remembered any candlestick patterns. Now we are confused about how to find out whether it is bullish or bearish. Let's blend it. Again, we have to take the opening price of the first candle. Next, since we have 3 candles, we take the closing price of the last candle. This forms the candle body. Next, we can form the lower wick based on the lowest point of these 3 candles, and also we can form the upper wick of the highest point in the candles. Then we have a candle like this, which is a bullish long wick candle. Many of you may know that these 3 candles together form the morning star, which is a bullish candlestick pattern. But imagine if you do not know about the morning star pattern. With the help of this blending method, you can find out whether bullish or bearish price action is taking place. In the same way, you don't have to remember all the candlestick patterns. There are many triple candlestick patterns and double candlestick patterns. By using this blending method, you can easily trade all those patterns without remembering their names. Let's see another example, and then we will explore how to trade based on them. Here, we have 2 candles, and we create a candle based on them. Notice, its body is in the middle of its range, and both wicks are almost the same, indicating an indecision candle. In this way, you can derive a single interpretation by combining 2 candles, 3 candles, and even 4 candles. You can then make trading decisions based on this analysis. Now, pay close attention to what I'm telling you. We never take trades solely based on candlestick patterns because candlesticks alone are not very powerful. Along with this, we also respect other price action methods, and we need to trade with confluence, such as support resistance, trend lines, demand supply, moving averages, etc. Just because we've learned how to blend candlesticks doesn't mean we should start blending them anywhere on the chart. If we encounter confusion near key levels like trend lines, support, and resistance, then we can employ the candlestick blending method. If you're unfamiliar with trend lines, supply, and demand, I've created a detailed video. Check the link in the description for more information. Let's see an example here, near the support level. We're unable to understand what this pattern is or what's happening in the market, so we blend these two candles. Now, we get a long wick bullish candle. Here, there's a hidden long wick bullish candle. And we also have a support level. We all know there's a possibility of a reversal in the market near the support level. So when the next candle breaks the range of these two candles and closes, we can take a buy trade here. Similarly, you can trade other candlestick patterns. So hopefully, you might have gained some insights from this video. If you found the video informative, then do like it and subscribe to the channel for more advanced concepts like this. If you have any questions about this, please comment below and I'll sort them out. See you in the next video. Till then, best of luck in your trading journey.